All right, cool beans. So looking at DXY, I am expecting us to open up this week. Um, I want to see how we react to the new week opening gap, right? If we break this down to the hour time frame, we can see this new week opening gap that we have here, and we can see that price is resting right up under that gap. So I want to see how price functions when the market opens up for Asian markets tonight, going into London markets in the morning. If we stay up under this new week opening gap, then price is more than likely going to make a draw on sell side liquidity. However, if we do push above this new week opening gap and we hold above it, price will more than likely reach for this PD array, this premium array here. And we do have a fair value gap resting above that. So if we do push above this new week opening gap, we could see price make a draw on all of this um, upside liquidity that we have to the upside. So that's what I'm looking at for DXY to start the week out with. Megan, get my internet time to catch up. So I'm gonna take us to Euro USD, look at currencies. Um, Looking at Euro USD, if the dollar does push up above that new week opening gap, that would fit into the scenario that I see Euro USD playing into, coming down to retest this discount rate here to the downside. However, if DSY hold below that new week opening gap and pushes to the downside, then we would consider Euro USD making a draw on buy side liquidity from Thursday's high. Um, and that's what we'll be monitoring going out throughout the rest of tonight and going into London markets in the morning for tomorrow's trading day. So with that being said, I'm not gonna look at NZD USD, but I did mark up GBP USD for you guys. So same thing with the pound. If the dollar pushes up above that new week opening gap, we will expect for the pound to come down and retest this discount array. And if the dollar pushes down, holding below that new week opening gap, we will consider reaching for Thursday's buy side liquidity for the pound. Silver, same thing. We had already ran Thursdays buy side liquidity, Wednesdays too. So if the dollar does push down below that new reopening gap, then we would consider Tuesday's buy side liquidity for silver and vice versa. If the dollar pushes up, we will be looking to run this sell side liquidity to the downside and potentially fall down into this sell side inefficiency and fill in this buy side imbalance that we have right here. That's what I'll be looking at for silver going forward. Looking at gold, same thing. Gold, will either be reaching for third Wednesday's buy side liquidity up here around 1860, or we'll be coming back down here to finish filling in this buy side imbalance here. And the rest of that little fair value gap that we see inside of there. It's all about how markets open relative to time and price. Looking at oil, uh, um, y'all bear with me. Having some technical difficulties here. All right, can y'all hear me now? If y'all can hear me, type of one. I don't know if I'm still live or what. Let me see. All right, cool bean. My internet keep going in and out, guys. So saying I got an unstable connection. Um, Trying to get to the oil chart. I'll tell you. Sure. Hmm. Tab. Here we go. Here we go. Alrighty. All right, guys. Um, um, I want to see if we respect 75.60 our level here. Um, if we respect this level this week, then um, I'm looking at these equal highs here that we have. I'm looking for price to make a run on that liquidity right there that we have right there. And we have a fair value gap to the left of that. So that's what I'll be monitoring for oil. Took all that just to say that. Um, for looking at ES, this is the previous week closing gap. Um, we see the consequent encroachment of that. That's the 50% mark of that gap. Um, right now, price is currently resting below this discount array of Friday's downward move. Um, so if the dollar pushes up above that new reopening gap and make a run for the buy side liquidity for DXY, we will be expecting ES to make a run on sell side liquidity to start a week out with and vice. Um, dollar pushes lower. And with that said, looking at U30, come on, come on. And then storming a little bit here today too. Yes. So, infrastructure just sucks. Might just have to. We're gonna try this one more time. Looking at U30, same difference as ES. If the dollar pushes up above that new reopening gap, we would like to see U30 come down and retest this discount array from Thursday's up move. Um, And if the dollar pushes down, then we would be looking for U30 to push back up and run this buy side liquidity to the upside that we have here. That's what we're looking at for futures. Looking at crypto, if I can get to it. Um, Bitcoin back up at our 25, um, back up at our $25,200 level. We came down. I wanted us to come down to 21,200, but we came down to 21,395. So a couple of dollars off. But we back up now. So now let's see if we hold this structure here. We come back down and retest 23.6. Let's just say, yeah, 23,500. If we hold this structure here, we should swing up above there. And our net stop should be 29,900 and something. So, yeah, keep adding to your positions. You playing crypto. Same thing with Ethereum. Um, yeah, net stop 1,800. Apecoin, y'all know we're looking for $7.70. Our net stop to the upside. So that'll bring me to a close for the beginning of the week technical analysis. Now I'll pass it over to Corman, who we've missed dearly, so she can give us the beginning of the week fundamentals. It's all yours, Corman. Welcome back.
Cool. Hey, everybody. So, yes, I'm back. Um, I would, I'm just gonna say it feels good to be back. So I am going to, so I took notes while I was gone. I'm definitely not going to go through all of them tonight. We're just going to go through the Forex Factory calendar. We are also going to talk about a couple of other things that are just going on that I feel like, you guys should either hear or keep in mind whenever you're looking at the news, so on and so forth. Um, all right, so G20 is this week. It's a part of the Forex Factory calendar, so just keep that in mind. Today is also a holiday, so um you should see more traditional market movement tomorrow. Also, a lot of this news that's coming out tomorrow technically would have come out today, but because today was a Canadian and a US holiday, and most of the Western hemisphere, as far as like major banks were concerned, were closed. A lot of this news got pushed off until tomorrow. So, how do I know? Is because you can go through and track when flash manufacturing and services news, when the flash manufacturing and services news comes out, comparison in comparison to other news items, you should be able to see like, all right, this comes out on such and such day or so and so days, a set number after a certain news event. So this was supposed to be, like I said, today's news. But tomorrow you have manufacturing and services news for pretty much all of Europe. So you got the EU, you have the UK, you have the US coming out with this news. Australia has this news coming out tonight, but then Australia and New Zealand both have rate news and some type of wage pricing news coming out tomorrow. So that's going to be important. I kind of skipped over this with Canada, but they have CPI coming out. So pretty much all of the currencies that we look at have something coming out tomorrow, or a currency that's closely related has something coming out tomorrow. So just a lot of news. Wednesday, G20, Euro, German business climate news is always something to look at. But then we have FOMC minutes coming out at 2, as well as a speech from the Royal Bank of New Zealand governor at 2:10. So that's literally like 10 minutes after our rate news comes out. So I highly suggest you don't trade NZD USD on Wednesday. It's just one of those times when you have news that comes out simultaneous like that. Um, you have one news item that's going to be pushing, and the way FOMC minutes work is when they get ready to come out, the news outlets are already trying to build up towards it. Then the minutes drop, then they get read, and all of the banks and all of the institutions that had the news but couldn't like do anything with it or get the news like right at 2 or 1:59 or so, they're starting to act on it. And then it becomes like this huge traffic jam in the world of trading. So everybody at the beginning is already putting in stuff, and then retail isn't putting in trades until like when NZD has news coming out. So you have like this lag and this crazy 45-minute window or so after these minutes come out to where the market's just in huge flux, and it's already after lunch. It's heading towards the end of the day, it's heading towards the final hour of market trading. So um, I would just say be careful if that is something you decide to do, even if you just did it based on US news. But the other reason why I say that is because it's day one of G20. Um, Typically, G20, they have specific times during the day when they actually have news updates on what happens. Sometimes they'll do interviews during the day from G20. They'll have like breakout sessions where you'll have leaders come out that will say, hey, this is what we talked about, or this is what we're thinking, or, whatever. So you have those also. So just be aware. Thursday, GDP, unemployment claims, day 2, G20. Friday, biggest thing is personal consumption expenditure for the US, new home sales, consumer sentiment, inflation expectations, and then more G20. So all of this news kind of leads up to some of the talking points that I was just going to briefly run through. So fear and greed, um, there is an index for that. So if you ever just question what the sentiment of the market is, what the emotion of the market is, always refer to the fear and greed index. I don't just look at the fear and greed index from one spot. I look at it on CNBC. I'll look at it on like a couple of other places too, just to see, because they're supposed to correlate and they're supposed to be relatively the same, because it's really giving you like a broad outlook of the marketplace and how people are feeling. And this data is supposed to be coming from pretty much the same place. All right. Corruption. So we talk about G20, we talk about World Economic Forum. I mean, there are lots of different groups, tons of groups out there where it's like certain countries get together, certain groups get together, certain financial leaders get together, and they just talk. And um, corruption and political influence tends to be one of the topics that we don't highlight and think about enough. But it's something that you have to keep in mind as a trader, and it's something you really have to keep in the forefront, because I call it smoke and mirrors. A lot of times you'll hear me talk about smoke and mirrors, and this is what I'm talking about. So, from a psychological standpoint, when the media, when a politician, when a government is trying to really enforce something, it's a game of smoke and mirrors because there is a whole element of marketing and psychology that deals with how long a person can remember a particular thing. So, if you, and I'm going to give you an example, a lot of people can relate with or have heard people say that you can relate to their story. If you get into it with somebody or you have a heated moment and you're emotional, that emotion is very high. It's like on the surface level. However, later on, let's say maybe a couple hours later, a few days later, a week later, you probably don't remember what it was about. You probably don't remember what you said or what the other person said. You probably remember some of it, but not a lot of it. It's just very vague. So the same thing happens in marketing and psychology and how information is put out to you. So if everybody from birth up to like your years of remembrance and building your foundation, everybody has a foundation. When you grow up, you have a foundation. You have either religious beliefs or you don't. You know your culture, you know where you come from, you know the things you stand on, you know the things you believe wholeheartedly. And as you get older, those beliefs just solidify. Those are the things that typically get targeted. And if you can sensationalize or make people emotional about things you know they care about, you're more likely to distract people from what is going to be a logical, rational mind. So I haven't watched the news, to be honest with you, and like, when did I leave? I left at the end of January. I haven't watched the news in like a month. So I couldn't tell you what's happened. Part of me cares and another part of me doesn't care, only because I know if I were to watch the news now, it would be like sensationalizing something. So right before I got on the call, just so that I kind of knew some of the more recent things, I just scrolled through. I saw Catholic bishop shot. I heard saw shooting, something related to LGBTQ and the rest. I, I not to be like derogatory, I just can't remember it at this point. Um Sorry. I saw health concerns related to a train derailment. I saw headlines for Biden going to make a quote unquote surprise trip, and which is definitely not true because governments just don't make surprise trips. But that is to say that they will sensationalize. They will pick out certain terms that they know people will get up in arms about and draw you to that. As a trader, you have to be able to sit back and know what trigger word was used. If a trigger word refers to someone's religion, their gender, their race, their orientation, like think about what people feel wholeheartedly deep down. Find those words like in headlines and just know, like, okay, this is what's being like brought up here, but what is the underlying thing and theme of what we're trying to figure out? So I say all that for smoke and mirrors because emotion is very superficial, it's very shallow. You have to be able to do something that is like long term or short or long term thinking, which is going to help it to settle in more. It's going to help it become more rational, more logical deep down inside. So, all these topics and all these things that we talk about when it comes to money is important because money is a very emotional topic for people. People get very emotional about their money. However, if you have a budget, for instance, you're less likely to become emotional about your money because you've already rationalized and made where your money's going and where it's supposed to go. So you're less likely to emotional spend, or you're less likely to get wrapped up about your money. Again, this is also another reason why it's good to have a trading plan, because when you have a plan, you're less likely to get up in arms about, oh man, my money this, or I lost $500. Well, if $500 was, the amount of pips, like if you convert it back to pips, which you're supposed to be measuring all this in pips anyway, but if you look at it in pips and that pip amount was within your stop loss range and was part of what you had in your trading plan, okay, I don't want to lose more than this, you shouldn't be upset. You shouldn't look at the number and make it more emotional than it has to be. So, those are the main talking points that I had. So, G20, FOMC minutes are coming out. US, we do have heavy news coming out on Friday, Thursday and Friday, really. We shouldn't be in the market Thursday and Friday anyway, but if you choose to be, just make sure that you're not taking in a bunch of news. It's easy to want to understand the world and understand things, um, and how they're just going to play a part in your trading day. That's fine. If you choose to consume the news, that's cool, but you just have to make sure that you take a step back and take an unbiased approach to it, because the markets are going to swing whichever way they want to regardless. Be emotional one. Let everybody else be emotional. Just know and kind of have a general sense of what the emotion might be, and then just kind of follow along. Oh, one more thing really quick. So the stock market. We talk about the stock market. We've been talking about it on calls and stuff. I have the earnings calendar for this week and for next week. I'll drop it in the group chat so you guys can have it. But don't get emotional either about the stock market. You shouldn't be emotional about any market right now until the Fed decides that they're going to stop raising rates. Don't, like, every time you hear like, oh, this company let, I don't know, 11,000 people go or 50,000 people go, don't think that that's just going to be it because it was a big number. You have to think about that whole workforce and how many more people they can afford to let go. So until the Fed finally says, you know what, I think we're done raising rates for now, it's still possible that companies are going to lay off thousands of people, consolidate, merge, cut benefits. And if you see more companies going out of business, filing for bankruptcy like that, that's just going to be par for the course until the Fed says, you know what, we're done. And then they have to stop raising rates for a period of time, allow the market to adjust to that before they even think about trying to lower rates. If anything, the rates will stay the same. People who get any type of government assistance or benefits recently saw like a little bump. The government doesn't like that. So eventually they are going to have to plateau, because if you think about Social Security benefits and Medicaid, Medicare, a lot of those benefits are tied to inflation and tied to rates that the government produces, or sorry, well, yeah, produces and puts out. So whenever these published rates get put out, if it's more than the target 2% or so, they have to start making adjustments. So those adjustments have already been made and have been accounted for so far. And yeah, just know that eventually, things will have to settle down So we'll see. If you guys listened to Michael last night, then I will spare you. Also, I mean, I have a Zoom where I already covered a lot of that stuff, so I'm not going to do it again. But it's real. It's going to get really real out here, you guys. So I mean, if there, I don't know, because I haven't been on Twitter for a really long time. So if you can go back, if he recorded it and you can go back and watch it, I would suggest you go back and listen to it and just take heed to a lot of the stuff that was being said, because if you haven't bought the Cycles book, or the Brenner Cycle, or what was the other one? Sorry, I'm trying to read the books from across the room. Uh, anyway, there was another book that I told you guys to look at. If you haven't read those, like, cycles are real in the marketplace. They're super real. And they say what goes around comes around when they talk about karma and stuff. No, they meant everything. Like everything, what goes around comes around. So don't eat fake eggs. Um, I would say don't eat fake meat, but I have some in my freezer. It's like Impossible brand. Um, I couldn't even. I was going to say don't eat fake meat and lie, but
too funny.
But yeah, the egg thing is for real. So inflation, back to like this whole emotional model, and I'm for real done. The thing about inflation is that companies will raise prices as long as people will pay. We've talked about this before, but people forget, because remember, I just said money is an emotional thing for people. So people get mad and will quote unquote boycott because prices are high, but then a company will adjust prices lower and then make whatever it is that you're buying smaller. And you think, oh, I'm winning because, I complained and now these chips, they're $2 again. Well, the bag is like 10% smaller. So did you really win? No. And then they're going to just jack the price back up again. So like now you look at gas prices, people aren't really complaining anymore because they have forgotten. And that's the thing. You wait long enough for people to forget what it was that they were mad about and do it all over again. And they forget that that was the price they were mad at. So corporations with marketing and psychology, it's a game. You find the breaking point for the general population, you back off of it, you wait. You wait for the sensationalism to die down, you wait for the emotion to go away. You just do it all over again. But this time you do it smaller until you get back to that point again. People don't even remember. So like people are tripping about eggs being like, I don't know what, $3, $4, $5 a dozen. But people buy eggs because they want to eat. People did the same thing with bacon years ago and they still buy it. And it's like, what? I don't know. I don't eat bacon. Like, what, $8 a pound or something? I don't know. I just guess. I really don't know. But anyway, that's all I have to say.
All I'm gonna say is pay attention to the size of the cereal boxes. Man, it's great to have you back home. We severely miss you. Seriously. Great to have you back. Dropping the sauce as always. So yeah, but pay attention to those cereal boxes. They're like a third of the size they used to be, and the prices is steady increasing. So yeah, with that being said, I'll stop the share